I'll go ahead and put these in the description if you guys are interested. This will be done, or this will be finished by Sunday. So yeah, we'll go ahead and go with that. I also have another question. Um, so I don't know if this is like ideal, but like I do these like case studies for the private group. Like I just do these for free. I try to do at least once, like one every week at least. Like at least I try to average that every week or so. At least try to get one in. But what I was thinking about doing is making like a separate playlist and like putting these like up on YouTube as a like a subscription. But I don't know if people would be interested in that. Um, but yeah, I don't know if anybody's interested in this, like just feel free to let me know and I'll try to set something up. But these are obviously free for all the members. Um, but yeah, I just wanted to know what you guys thought about that. And then, like I said, the Black Friday stuff will end this Sunday. But other than that, let's go ahead and get started. So I had a couple of trades this week, right? I had like two or three really good trades for clarification. What was free for the members? The case studies, bro. The case studies. They're in the Discord. Case studies. Obviously I can't click it because the links are in there. But um yeah, bro. I've been doing these. I don't know. Yeah, I don't know if you haven't seen them or like they're like right here. Um, but yeah. Anyways, I did have like two or three. Oh my bad. I did have like one good scenario with gold, or two good days with gold, and then one really good trade with USDJPY. It's not really a pair I look at, but I was just kind of bored and I saw the setup and I just thought it was a perfect setup. And I want to go through that setup because this is like a perfect LGC model. And I'll go ahead and give you guys the criteria on that. Because if I am gonna make, I am planning on starting to make some like YouTube videos for like either the end of the year, starting the end of the year, or starting January. Like I have a couple of ideas ready to go. I do want to make I do want to make a video called, or pretty much going over inversion. I don't know if you guys remember what I mentioned with inversion. I want to go into a little bit of detail with that, where pretty much how I used inversion to build the models, where it's like rather than trying to continue the trend and like continue or pretty much follow conventional topics, like follow the trend, trade a mitigation or a demand zone, supply zone, or try to trade right a breakout strategy, etc. It's like rather than trying to trade what you think you're trading, look at what your losses are and look at consistencies in the losses and try to build a model over it. Like I said, like OFD, right? It's a failed POI. If we look at structural disruption, right? It's a failed structural continuation. If you look at if you look at the LGC model, it's a failed reversal. And then if we look at a sweep, it's also another type of failed reversal, but it's really more so a failed break, right? And then with certain criteria, you can capitalize on this being like a a potential trade. So I want to go into that and like show you guys what I use like to build the logic around that. And I thought that was because that's a really interesting topic because if you just look into Google and like you ask like how do you use inversion in trading, it's not really that good. Like I don't like what Google puts on like AI. Or I even looked on ChatGPT. I looked through various AIs to see what they would say. But my method of inversion was not necessarily. It was like first of all, you got to focus on not necessarily how to win a trade, but how to not lose. But the another way to look at inversion, it's like look at your losses and rather than trying to avoid the losses, trade the losses if they are consistent, right? Like it's kind of like if you guys remember like a SMC term back in the day, it was like put your entry where your stop loss would be. Like that logic is just based on the idea of manipulation and fractals. But trying to apply that is a bit more difficult. So like rather than trying to trade where your stop loss would be, frame your loss, and if your loss is consistent, then you have a your unique model because obviously your losses are your losses, So I definitely want to go into that. That's like idea one for YouTube. Number two, I do want to make like an updated structure video because I like literally everything that I trade is kind of based on structure because obviously sell to buys and buy to sells, right? Sweeps, CBOS, full BOS, reversal BOS, all of that is based on structure. It's like I call it liquidity based structure because the liquidity is built in thanks to the CBOS concept. So I want to go into making my own like a market structure update video, like just going over everything market structure. And then I do want to give you guys like a free like A plus setup, which would be like the LGC model, which I'm gonna go through today. But other than that, I don't really have too many more ideas. But but yeah, let's go ahead and go through this gold scenario. So gold scenario number one, it was here. So this is also one of the newer models that I had in the sweep model, or in the sweep book, I'm sorry. And it's kind of it's pairing CVD divergence with a sweep and a transition. So if you go to gold, where that scenario was right here, if you guys can see. So I actually took a loss before I was able to get this set up because when I was first looking at this, right, at least looking from the external POV, right? Obviously, we're currently bullish, right? And then my entry was here. So we're currently bullish and we have a structural disruption. Or I'm sorry, we have a internal break of structure. Then we have a potential structural disruption because we're breaking internal structure. But I'm still bullish because we were unable to break, right, the current range low, which is this. So because we're unable to break a range low, then I'm obviously going to try to assume and force the continuation to the upside. Now, the issue, right, with trying to be bullish now internally is that the internal structure is bearish. And we can technically see that this is now technically solidified bearish. But I was first looking for a buy, assuming there was like a sweep here, right? And something that I really liked that happened here was the fact that we had an internal CBOS into an internal structural range with momentum. So to me, that kind of showed me that we had an intention to go higher, and we kind of failed to break structure into the downside and broke through. So I was actually looking at potentially buying here. There's also CVD divergence, but more than anything, there was an engulfing. And after we saw the breakout here, I was kind of waiting for this. And unfortunately, I just didn't get it. So like the key thing with trying to play any kind of mitigation is like if you see the reaction before your mitigation is tapped, then if it's to come back, then technically it's a failed reaction. So you would need some type of transition, to then try to justify a movement to the upside. So I made the mistake of trying to chase. My position was here. So I was kind of just trying to model this exact same scenario that occurred here, right? We had an internal sweep engulfing to the upside because we had an internal structural range after this transitioned. But the internal structure here is bullish. So I was kind of anticipating this to be a CBOS. There was no engulfing, which should have been red flag number one here, right? But there's can anybody tell me what the difference between this and this is? Can anybody tell me what the difference between this and this is? Why this is a winner, why this is a loser?
Order flow completion.
Technically, yeah. No, technically no. It's more so the fact that we had an internal push that was broken, right? And yes, here we technically have an internal push that's broken, but I'm here being supported by CVD divergence and an engulfing. Whereas here, I'm actually sweeping this. I don't have an engulfing, right? And maybe I can consider this valid based on the break. But as soon as I see the internal reaction go opposing or oppose me, right? Whereas here, I kind of just get the engulfing and go, right? This should be my sign to exit. And that's relevant because if you zoom in here, look at this. The setup is very similar where I got the CVOS and then I'm trying to look for the buy. But this is where we had the shift, right? Because we had an internal bullish range that be taken out. Therefore, now the order flow is bearish. That did not happen here. That did not happen here. From as soon as we had the CBOS engulfing, we kind of just went, right? So I took a little loss here. I was trying to buy right after the structure break. I think it was aligning with the external, but I failed to realize that we had the internal order flow completion there and then the break. Therefore, this is now a failed reaction to the upside. So now I would need after this break, I would need this to break to then justify being bullish, right? Does that make sense? Price failed to break overall high. No, I mean you can say that, right? But like, how do you define that? Like, like because technically I'm looking at the same scenario, right? CBOS continuation, but this is the key, right? The fact that we had an internal leg fail, right? Solidify and then fail, then the order flow converts bearish. So I had the justification to buy, but I didn't have the justification to hold the buy. Right? Whereas here you had the justification to buy and you obviously went immediately after. So just minor details like that make all the difference, right? And not to mention I am kind of chasing it because I am trading like at a premium and I'm looking to just kind of squeeze out the profit here. So realistically I should have just been waiting. So that loss happened and then um now can anybody tell me what happened? Can anybody tell me now why I bought here? Right? I excluding the whole CVD thing, right? Can anybody tell me the difference here? Why I'm not just kind of looking for the continuation downside? Can anybody tell me why? And it's not because of the CVD.
Can I
Golf,
say
no. Mm. Hmm.
this momentum after we had a significant high, still liquidity and go down?
No. So inverted HNS Pro. No, we don't use that here, brother. Um, so the biggest key to a POI is always the reaction, right? If I'm looking at an internal range and I'm looking to be bullish here, right? Or if I'm looking to shift, then technically I would need this to break, right? But right, I'm also looking for this to be my continuation to the downside. However, I got the reaction before the POI, right? Which is exactly what I meant with like here, because we got technically a bullish reaction and then I'm still looking to buy. So it doesn't make sense because the order flow converted. It's the same thing inversely here, where we have a bearish leg, but the reaction has already occurred. And then we swept that and now we're at the POI. So now, in order for me to justify being bearish based on this POI, I would need this to break because then that's a failed transition and that's a LGC. So I cannot be bearish. So now I don't have to wait for this to break because the reaction happened. I have the engulfing, I do have the CVD, but the main thing is that I had this break or give me the reaction before it tapped the POI. If this taps the POI, right, and then it does a sweep, and then maybe it comes back up, I may not still be as convinced. It just doesn't make as much sense. Whereas what it did here, where you have the reaction and then it comes back, because that is a sweep in and of itself. Um, and so that was my position there. So I took one loss and then I took that position there. Um, right. And then I ended up taking partials, right? First partial here at equal highs. Excuse me. Second partial here at these equal highs. But then after that, I ended up taking another loss because I started to trail my stop. And you can see that here in the markup. Right. So I started trailing my stop because I was asleep here. So I actually wasn't able to move my stop here because it was pretty late when I took the entry. Like it was like 5 in the morning. So I ended up waking up like around here-ish. So I wasn't able to trail my stop up because obviously if I'm looking to trail my stop, it varies. I like to say that I want to have the LG, but no low was swept. However, right, I'm so close to my TP, like my full TP, that I would have probably ended up trying to trail this. Especially once we broke here, it's like, look, I want to at least trail up to here. So me, right, I'm now seeing this as a bearish reaction, but I don't want to use the bearish reaction as a reason to be bearish because we're still bullish externally. So I always want to try to force the continuation. So I had kind of an LGC here come into play, but this is now where the biases start to conflict because we took out equal highs, and now this is the key part here is the fact that we had this internal sweep. Therefore, this leg has completed, that leg has broken. So now internally, right, we are bearish, right? So if I'm looking for any kind of continuation like I was here, right, it doesn't really make sense because the internal order flow is bearish. So if I wanted to have this be now bullish again, I would have needed this, right? This, have a substantial break there. That had no substantial break, right? But that was already beyond my setup. So I ended up taking a second loss here because I was trying to force the continuation, low, high, but it's just that we swept here. And these minor details are what kind of kill it for me sometimes. So um, I would still take the risk once again if the situation was to come up again, because I did take one really good winner, but I did take two small losses, right? So overall, I would still be pretty content with the outcome because I think I ended up making like 5% on that, I think, or something like that. Um, but after that, right, that was my trailed stop being hit. So I got my trailed stop after I took my partials here and here. And then I did take that small loss there. But after this trailed stop was hit, right, I was actually now a bit concerned with the direction that we were looking to take. The reason why is because we created a bearish range. We swept that previous high. We swept two equal highs here, and we broke structure internally. So technically, right, the internal structure here is bearish, right? So the next day, as we can see here, right, we're very bearish here. We're super bearish here, right? Especially because we just swept here. I didn't trade this, but I did note it. And we did get that bearish reaction to the downside. However, the biases are conflicting here because we just swept equal highs, order flow is bearish, but structure's still bullish, right? So my internal is bearish, but my external is bullish. So I have to wait. All right. I have to wait for something here. Right. So this is my scenario now here. And I'm still a bit conflicted because I can argue, right, based on this scenario here, just because we're kind of ranging, because we had this sweep and takeout structure, I could anticipate this to be a sweep. But the external, like I said, is still bullish. And the internal here is still bullish as well. So I did have like a Fibonacci here and there was a POI, but I couldn't justify it being bearish because the internal leg here is bullish and my external is bullish as well. So the biggest thing here was the fact that we had an internal sweep and we had a very big engulfing here, right? And if we go into a smaller time frame here, there was actually a pretty nice transition or a pretty nice internal SD here if we want to see here. Right, so we swept this low, meaning we have now solidified this high. There's clearly a buy to sell here. So we have this be solidified, and then once that solidified breaks, then that is structural disruption because we're still within the internal bearish range. So because it's structural disruption and I have an M15 candle, right, that's very bullish, then I thought that gave me enough conviction to want to take this scenario. So this ended up hitting my trailed stop. I don't know if you guys saw or for my members, I don't know if you guys saw the breakdown. I was breaking this down here, or when I made the video. I ended up taking a set of partials here and a set of partials here. And I was maybe a bit too hasty with moving my stop too quick because my original trail stop was here. Because now I don't want to risk all of this profit for minimal profit. All right. So the that's also like another thing that can be conflicting is like how you manage your position because you can really only do a couple of things. You can hedge your position, you can take partials, or you can trail your stop. slash move break even, right? Those are really the only the only possibilities that you have to manage your position. So I had my original trail stop here, and I ended up trailing it even more when we had this move to the upside. But here's the thing, like even if my trail stop is to hit, technically I'm now bearish, but um my structure is now bullish, so I would need now another transition to then move to the upside again, right? So I don't regret moving my stop loss because at the end of the day, I do want to secure as much as I can per scenario. And there's still the possibility that we potentially mitigate something up here, or we just sweep this high and then we kind of just follow the structure, the the middle level structure. So it was just a bit conflicting all around. Um, and what ended up happening here was we ended up actually getting another scenario. I pointed this out to the group here. I pointed out a small CVD divergence here, if you guys see that. Internal bullish range, right? Internal bullish range is swept, divergence, and then this could have been an easy 1 to 2, 1 to 3 up to take out that previous high. But if we're looking at this now from where I trailed my stop, which is here, right? Now that we have my trailed stop break, we clearly swept. We now have internal bearish order flow. So therefore, I'm anticipating this low to still continue lower because the internal order flow is bearish, although my structural range is bullish, right? And then this ended up switching here because we have a CBOS, then we sweep here, and then we break. So that's now an LGC. So then this would have been a potential buy to then go higher, right? But I was not paying attention to the chart at the time. But this ended up still hitting TP, right? And I'm not disappointed with this at all, actually, because like I said, I want to make sure that I walk away with as much as I can, but I'm also taking partials along the way. And if I don't get that second transition, right, then obviously I don't get the buy. But if that transition doesn't happen, then this still continues lower, right? And I can't anticipate that this transition is going to happen, right, until it happens. So are there any questions with this scenario here? Do you guys understand why I entered the trade here and why I moved my stop here? Are we making sense or no? Cool. Cool, cool. Let me see. Next one was I'm actually gonna do the UJ setup last because there was a really nice sweep this morning, right before I went to bed. I only slept like a couple hours, but there was a very nice transition setup here that ended up being this is a traditional sweep kind of to the T, which is UJ, right here. So this occurred. Oh, that was UJ. I'm sorry. I'm going to go to UKAD. I'll go to UKAD first. Oh my goodness. Yeah, oh wow. I did not think this was just gonna go like that, actually. Jesus. Jesus. Anyways, I actually do want to talk about that too. So before that, yesterday we had a very clear bearish range be swept, and there was actually a very nice transition here. I don't know if anybody caught that, but that was a very nice transition here. If you guys don't know, right, the transition here, right? If we're looking at structure, then I need to see a transition. And note that I'm not going into M1, right? I'm specifically not going into M1 because if a M1 has a transition, then that's a CBOS for M5, M3. So if we're looking at low into high, low into high, once that low into high is broken, that is the shift that I'm looking for because that is an internal reversal break of structure. But from the M1, I may still not be able to see that. If we go to M1, actually, in this scenario, yes, you would have been able to still see it. But the reason why I want to stay away from M1 or not stay away from it, but just not prioritize it, especially when I'm looking at an M15 bias, is because the M1 is technically 2 levels below the minor intraday, which is where my bias is coming from. So realistically, I want to use my scalp for my minor intraday, and I really only want to use my micro for my scalp. So if I don't need to go to M1, I'll just rely on my scalp timeframes. And then from here, you could have easily taking either this entire zone, or if then you want to zoom into M1, then there's like an internal LGC here. And then once that breaks structure, right? Once we have this break structure, then it makes sense to look for the sell. But that was really nice. I actually just saw it like too late. I saw it like when it was like right here. Um, but I wasn't sure of whether or not we were going to continue lower, right? But if we're looking at the structure here, can anybody tell me why or when I look for the sell here? When can I justify a sell here? Trick question, maybe? Just depends on how aggressive you want to be. But can anybody tell me where or when it makes sense to start looking for a sell based on the data provided here? Okay, well, I guess nobody's seeing that. So the it's here. This has to be taken out for me to look for a sell. Why? The deep retracement, well, it's not technically a deep retracement, bro, because the entire range is high to low, right? This is the high that led into the low. So technically, we're looking at like a decent discount. I mean, a decent premium. You know what I mean? Like this is a decent premium.
I mean the
And
deep
maybe,
retracement closer to the where your pivot levels are, that golden, that where it went
oh,
blue to gold after
here,
the sweep after the LGC up top a little higher.
this one, this
The
one.
gold is the deep retracement, but
Mm-hmm.
where you have like your level for Fibonacci, um,
Mm-hmm.
and it might not be a LGC, but it either it tested and went down and went bearish straight from there.
Mm-hmm. Mm-hmm.
So that's what I was thinking. It's probably a good sell after it went for that deep retracement with that gold
Mm-hmm.
mark.
So obviously this internal has to be bullish, right, to reach the CBOS. But I usually want to see either another sweep, or if I don't get the second sweep, then I need to see that final low into the high get taken out. And until that gets taken out, then I can start justifying whether or not I want to be bearish. But the key thing here is that we had this, right? Once we swept this high, solidified the low, and then we broke structure, that gives me a structural range to play off of. That's why that's my Fibonacci range. And technically, my entire region to enter can be the entire sell to buy here. I mean, the buy to sell here. Sorry, right? As long as they enter anywhere in this box, I'm 100% justified to sell. Right, but I put my limit at the 70, and it hit it perfectly. If you guys want to see right there, it hit it perfectly. And that's not because of the Fibonacci. We can also say that there is oops, we can also say that there is a potential move here or a potential POI here, but I don't really care about that. Like I said, I care about this. So I had like an entry like literally right at the open, and then I had another one at the 70. So my validation is still the same, still only about 5 pips. And this is 100% justified solely because of the failed reaction that's present that creates the structural range. This reaction, right, that creates a structural range, that is the entire reason. That is like 100% the reason why I'm looking for a sell here. Because now this is now aligned with this. So I can now look for the retracement and look for this target, internal model, external target, right? But this one actually ended up going really far. I did not expect this to just die today. I did not expect that to just die. But at least now we know that we're full on bearish till here, at least for like the next month or so. Um, but I'll come back to this. But I do want to talk about why I don't really hold my positions as long as I could anymore. But really, like the what I really should be doing is like at least holding like 10% volume, 15%, 20% volume, and then kind of just trailing immediately to see how far I can go. Because then out of nowhere, you will get meltdowns like this, and that is how you kind of scale to an extent. But let's go ahead and go into my UJ setup. The UJ setup, this is a very, very important setup today because this is the picture perfect LGC. Because clearly we are bearish, right? Lower high, break of structure. But we clearly have a bullish break of structure. We have unwillingness here. So technically we are bullish internally. And we do technically have the buy to sell that created the structural range. But this is a really big region. So I don't really want to just look for the Fibonacci here. I would consider that kind of predicting, and I don't want to predict. Um, right. And after this, I'll ask you guys what you guys think about reactions versus predictions. But the reason why I am now looking for this 70 retracement is because we have a failed move here. We have a solidified high, and then we have a final push to the upside, which is kind of similar to what I said invalidated the gold setup or the first gold buy that I lost is because we had that final push up break, right? And then once we have that final push up break, this sequence itself is the LGC, right? Whenever we have a solidified high be taken, and then the solidified low that's created based on taking this high is then taken. That is the perfect LGC, right? Whenever you have a solidified high, solidified low, well, solidified low is created because the solidified high is taken, and then once that solidified low is then taken out, then that is a clear LGC. Plus, we're reacting from the POI. So really, from here, I could take this entire position as well. Like this is not bad at all. But I took my 70% retracement here. And with my invalidation, obviously, or my stop loss at invalidation, obviously, as always. And then this ended up going like straight to TP right afterwards. This is super, super nice. But I do want you guys to note this because this is the picture perfect LGC. This is, if you guys want one simple setup to always trade, it would be literally a 15-minute bias because I think we can see it here. Oh, you can see there's no bias, but that just means that the M30 is technically bullish, but the M50 is bearish. But as soon as I have the LGC aligned with the structural range, which is this structural range, I am now justified to pursue that liquidity because I want to force the continuation. All right. Does anybody have any questions on this? This is a picture perfect LGC. No questions here? Everything good? Right. Yeah. And the cool thing too is like realistically, it doesn't matter what my time frames above this is even doing because I'm not aiming for an external of the external target over here. I'm aiming for the external range that or the range that's in play, right? I'm looking for that continuation. But the sequence is going to be high is taken, which means you solidify the low that breaks that high. That high reacts from the POI. And I believe this is also like a picture perfect 70% between high, low retracement. I think so. I'll check right here in a bit. But that wouldn't have mattered to me though, because we have the buy to sell. But once we have that solidified low go into the POI and then that's taken out, that means that that internal leg is violated. Therefore, I now have a range to play under. And you could either do Fibonacci, you could do final buy to sell. Really doesn't matter as long as you make sure you get an entry and your SO is an invalidation. And then this is your picture perfect LGC. This is like the easiest setup I think that anybody can trade. If I'm being 100% honest, it's the easiest setup anybody can trade because you have an external range. And although your internal is bullish, the internal LGC is what justifies the conversion. And this is like a 1 to 6, I want to say ish, right? But I do want to come back to the USDCAD trade where it's like you see moves like this, once in a blue moon here and there, where it just fucking melts and you see the possibility of, oh, if I would have held this, I would have done like a 1 to 20, 1 to 30, 1 to 40. But it doesn't matter to me, at least not in the in the long run, like if I make it a rule to keep holding this beyond my TP, even if I'm taking some kind of partials, if I want the good, then I have to take the bad as well. Like the most important part that I've realized is over like the past year with my trading is I don't want to focus on I don't want to focus a lot on my winning trades. I don't want to focus too much on trying to take as many winners as I can. I think it's more important to realize when to not take a trade and inversely when to exit the trade. Right. So if I'm in a profitable trade already, then I want to take out or I want to take a TP based on what my rules are. Because then we have scenarios like UJ. Like here, okay, what if I would have done the same thing as UKAD and I would have tried to hold? Then I would have wasted all of this time and I would have broken even. Because if I want to if I want to align this trade now with like if I want to hold it based on the alignment externally, then I now have to involve other levels of structure, which is not a good or bad thing, but it's a complexity thing. It's like you add complexity to the scenario, which means there's now different possibilities that can happen. Like a if this then that would be just looking for the LGC. If we have a structural range and we have a transition, then I can aim for this. But in order for me to hold now from here to here, it's if we have a bearish range that is aligned with the external time frame, and then I have an internal transition, then I can hold there. So you guys see how it's not a if this then that, it's now a if this then that, or if this plus this then that equals this. Then I now have a three-dimensional trade, which means that the amount of possibilities that can happen substantially increases, right? Because if you have a if this then that, only I can either get a win, a break even, or a loss. But if I add complexity to the trade, then I add the higher time frame here, then I now have the possibility of either getting a very big winner. I have the possibility of wasting my time and having this kind of reverse on me. I have the possibility of either potentially partialing out, or I maybe have another possibility. You know what I mean? Complexity is the enemy of execution. Exactly. That's why, especially with my scalping trades, like that's why I said I want to avoid M1 because I'm not adding another complexity to the model. And if I'm adding complexity to the model, then I have to understand that there's more possibilities that can happen. So and look at gold as well. Like if I didn't have my chart stop and I would have just held the TP, what happened after my TP? You know what I mean? If I would have just if I would have just held, like if we would have said that I want to hold, I would have made 1 to 20 here, but over here I would have maybe taken a break even or a loss, and then over here maybe I would have taken a break even or a loss. You know what I mean? So like the cost of me saying I want to hold this longer, you have to not only accept the good things, but you have to accept the bad things. And that's like that's what I call that complexity, like within a scenario, right? So I'd rather just walk away with my 1 to 5. Who gives a fuck? Like I'll come back next week, like whatever. I win a trade, and that's it. You know. But yeah, overall, very good scenarios. Valid, yeah, yeah, yeah. Like you can't justify more good without justifying more bad as well. Like that's just the cost of fractals as well. Like the inverse is valid because everything is built on each other. Like these are models within models within models, right? Like models within models within models. That's why in a lot of scenarios, you can also justify why you can be bullish. Like if I'm bearish in a scenario, I can also probably justify why I would be bullish. Like I could justify and say that this is a CBOS and we have a bullish structural range and we should be looking to be bullish. So you guys have to accept the good or the bad with the good. That's pretty much like all I'm getting at there. Um, but yeah, I think we can go ahead and get started with the case studies. I know we have a couple here. Here. Oh, we have quite a bit. Okay, cool. Okay. Okay, this is my exact same trade. Very good, bro. This is my exact same trade. It's very good. Um, yeah, it's my exact same trade. Very good, bro. This is a win. Very nice. So yeah, same thing here, right? Like, although we're reaching, right, that bearish POI, it's just the fact that we had that reaction, that internal leg be solidified based on his break, and then that's to be broken, then that's the shift that we're looking for. So yeah, very good on that. Very good on that. Okay, this is Nas. Okay, similar concept here. Very similar concept. Um, where I find it like something I don't like to do. Like whenever I see something like this, I just like to stay away. But I know that in with Nas, like there are some tendencies with certain pairs and crosses. So here, right, we have solidification of the low, and then I would not be bullish until that breaks, right? Even if we have the engulfing, right? If we have the engulfing, I would probably take it if we swept this low, because then that would mean that the internal move is completed. And then if we have a shift after the engulfing, then I would like that. But this one, I would not consider valid until this is taken out. And then maybe you can hopefully get that. But I don't know if you would have gotten that. Let's see. Oh, I don't think it shows. Yeah, you see what I mean? So if I would have waited for that full break to happen, then this is my entry. You see? And that little detail, trust me, it's gonna go a long way. If you just wait for that little move to be taken out, it makes all the difference. Trust me, because this is the final low high that takes out a low, and then once that solidified high is broken, then that's your sell to buy to base your trade off of. But yeah, still it's still very good. One, two, three, four, five. Okay, so this is I don't like this one. I don't like this one because we have a bear structural range, CBOS. Then we have an internal LGC. So order flow is bearish. So even if we take this out here, right, I would only consider this break as my reason to buy if we take out that low. Because right now, if we're taking this out, then we're still technically in a CBOS and there's no solidified high here. So we're not taking out a solidified high. So I don't know. I don't I actually don't. This is one I actually don't like at all. Yeah. Okay. See, so here we have the CBOS, and you can see that there's a reaction coming from the POI. So it's until this high is broken to me that I can then justify to be bullish, right? Because if we wait for that, then there's clearly here you can see too that there is a POI. So yeah, I do think this one's a bit aggressive. If you wait for this break, then this is like bet the house type. Um, shit. But yeah, I like that. It's not bad. I think that was number three. It's number four. Okay, this one is yeah, this one's perfect. So this is a textbook sweep here. If you guys can see, we have a bullish range, and then we have a bullish internal range. So there's a low internally that took out the high. So I can have, you can put like a range on there, a Fibonacci range. And because you have this little shift here after that sweep and it's a continuation, then this is very good, in my opinion. I would take that. Yeah, this is very good. Hmm, very good. No, that was today. I guess that's the same sweep that I showed you. That's the same sweep that I showed a little bit earlier. This is where I had CVD divergence. And then that hit the TP, which was here. Or actually, I don't even know what TP he's looking for there. Oh, I guess he's looking for the H1 POI. Yeah, that's right. H1 POI. Very good. That's actually very good. Let's actually close some of these out. Does anybody have any losses they want to go over? I prefer going over losses. Uh, this is very. I like this one. This is really good. So I like this. It's a reversal setup, yeah, but it's a justified reversal setup. But I do need you to know why you're taking this scenario because if you're just taking it based on this, you're gonna take way more losses than you think. All right. I don't know if you're on the call. If this person's on the call. Can you tell me if he's on the call, can you tell me why you entered here? Because I know exactly why you entered or why it would have worked, but no, I don't think he's on the call. But anyways, structure, low high, CBOS, we complete order flow, but just because we complete order flow doesn't mean anything because we're still technically bullish. No. This is a perfect reversal trade because you had this. So if you have this, that means that you solidify the low. So if you solidify the low and you take out the low, then any type of scenario up here is 100% justified. Like, here's the thing. You guys know the difference with a LGC and SD, right? Do you guys know the difference between the two models?
One works with like internal structure, the other one is actual like major levels or legs.
No. LGC is a continuation, SD is a reversal. So if you ever want to classify like when to look for which, it's like, for example, I want to look for an LGC not after we had a CBOS continuation after an extended range. I would not want to look for an LGC here because this might be overdue for a pullback before we go up. So I would only want to look for an LGC after a transition has occurred, but not after a full move has been given. Do you understand what I mean by that? Like there's a very big difference. Like catching a transition right into an LGC, this is when I would look for LGC, right? Not after I get the delivery and then I now get another LGC. I would not want to look for the LGC here because we are already overextended. So like if you ever want to look for a SD, a reversal scenario, it's an SD and it has to be after a big move has occurred. But the big thing here, the number one thing you have to note here is this. You have to note that. If you don't note that break of structure, then you can't assume this to be solidified, right? Because we solidify based on preliminary break. So if we solidify this low and then we take it out, right? After we just had order flow completion, then you have a very good trade or you have a very potentially good trade, right? You can't call it very good trade until after the result, right? But yeah, potentially a good trade coming. So once you have that break after this reaction, then really it does wherever you take a trade doesn't really matter as long as you have your stop loss at the high. Because this is now a protected high, just because this high solidified the low and you broke the low. You know what I mean? Because then after, but the thing is too, it is aggressive, but you could also, you don't even have to trade this technically because realistically, if you note this model, you can use that as a frame after this is broken because now you can easily do low, a high, low CBOS retracement, right? Because I was actually looking for a sell here. I was looking for a sell here. I didn't want to sell here yet because I didn't know if it was ready. I didn't really like want it to be ready yet. I didn't know if it was ready yet. Um, but there's actually like an H1 move here. So like, for example, here, now that we have the SD occur, and if I have a CBOS, then I now have an LGC, right? This is where I would justify the LGC because it's a continuation move after the transition, right? Not after a big move. So then here you can then see another internal LGC. If there's probably an LGC here in the internal time frame, and that's where you see the high be protected, and then from there you can easily aim for here, here, right? And then from there, just I would just call it quits from there. Just get the trade in and out because it's Friday. So yeah, so you can trade the SD, but honestly, if you're looking to trade the SD, like I would try to like if you get a good SD and a good entry, like I would try to hold it because you're catching a transitionary move, right? To at least like an external target. That's when it for me that would make sense. If I'm catching the transition from bullish to bearish, then I don't want to just take my TP here. Right. I would only take my TP here if this did not happen. And I'm just looking for a straight up reversal. Right. That makes sense. Cool. So do we have any losses to review, guys? The losses are important. Those are the most important things, guys. But yeah, other than that, it's kind of unless you have any more questions or concerns, guys, or anything you guys want to talk about, I don't really have much else for today. Mm, yeah, you see, this is kind of retracing. This is why, like, what do you think about BTC next week? I mean, I don't know. I was kind of looking for this weekly here. Like, I was kind of looking for this, like long term. I wanted that inefficiency. Really, it should be this range that I'm looking at. But I don't like that it's given the reaction right now because I was really looking like the only setup that looked decent on crypto was like Solana, but it didn't reach my fucking entry. Like, look, I had this ready, but it didn't reach my entry. Missed it by like a bit. So I wasn't able to get in that. See, like here we have a perfect sweep. Sweep, and then we have the SD internally that breaks structure. So I was just hoping this gave me the pullback. But yeah, it's given the move and I didn't get it. But I mean, if it's up to me, bro, fuck this shit. Like I want the shit to die. I'm not a Bitcoin guy. Like bro, like look at this. Like someone tell me a reason to buy after you look at this. And I think someone sent me this picture. I mean, bro, look at that. That's fucking crazy. You know, if I would like to see another 6 month mark, another 6 month candle. Give me that sweep, and then maybe I'll think about buying because then that would be what like a 40% retracement. Yeah. And I had this image. I don't know if I still have it. Yeah, it was this one. I found this the other day. I thought this is real interesting.
So, do you think it's because of the December price action?
No, it's not because of December price action, bro. It's because there's so much optimism in AI. No, people aren't putting their money in Bitcoin. All the optimism is in AI, bro. It's just like you can put your money in Bitcoin, but if we're like, if like I don't know, like I'm not an expert on it, right, or whatever, but if we're gonna go tokenization route in terms of like fiat, like there's no real need for the Bitcoin. I mean, there's need for the blockchain tech, right? But in terms of like moving our assets from fiat to crypto, it would be like another type of stable coin. Heard about the AI bubble? I mean,
I was saying I haven't thought about it that way.
look at this. Yeah, no. Like everybody's so optimistic about AI, but like Michael Burry bet against Palantir and Nvidia like early November, and like he's up. I think he's up. Yeah, he's kind of up. He's so like I think like November 15th or something like that. Yeah, like something like somewhere here. He's up. And I mean, shit. I mean, give me a fucking pullback. Like, come on, like give me something. Cause like Michael Berry isn't like I like from what I've seen, I haven't seen too much, but just from what I've heard, he just thinks that he just thinks that the value of the stock based on the logistics and all the numbers in the back end don't make sense. So like if any other company would have had those same numbers, it wouldn't have gone up this much. That's pretty much like his bet. It's like the market's not efficient, I guess is like an easier way to put it. But I mean, shit, I better hope this is a structural disruption and then we kind of see downside, that would be cool. And then he bet against Palantir too, right? His company's the mark of the beast, if you know what I'm saying. This one's recovered already. Yeah, this one looks like it's gonna keep going up. This one looks super bullish. CBOS. That one looks bullish. I'm not gonna lie. But yeah, I mean, I wouldn't say I'm bearish AI, but I mean, I get the bet. Like you want to sell when people are obviously all bullish, and everyone and their mom is bullish on AI, which I think in the long term it's still gonna work out, right? But
Question.
hmm,
Because I also been looking like into stocks a little bit more after like building on the knowledge I get here. What do you think of like like more health group companies? Like I was looking at UNH, um, just
hmm,
trying to United Health Group because they had a in terms of momentum. I just kind of looked at it in terms of like how they fell from I think 2020 and different
hmm.
things like that.
Oh
And
yeah, I
they had
mean,
a previous
sure,
drop that was similar. Um, I want to say back in 2008.
sure. Give me a sweep. Give me a sweep. And I'll think about it. That's the only way I'll even look into like stocks and shit, like or into Bitcoin and stuff like that. Like what was that? Like Zcash? You guys saw Zcash and shit? How that like blew up? You know? You see how there's a bullish range and then we sweep the range. This is the only setup I would ever trade on like crypto or anything like that. You have a bullish range, the bullish range is swept, and then you have the big shift. So then this is your buy area. And then, bro, this is like a crazy return. This is the only way I would ever like get into cryptos or anything like that, or even stocks maybe. But yeah, this already retraced, like, but it's still 900%. It went all the way up to like 1800%. So let me see something. 1500%, 1600%. So like if I ever look for like projections, it just depends on how old it is. Like if this is the only move that's available or that's like here, then I'll base it off of that. Like if there's a 1600% move, then I'll look for the same thing after wherever my entry is. So like 1600% from here, is like up there. So then that would be like one of my biggest TPs. Because like with Bitcoin, it's like I said, like everything is like distance and time. This is a bad Bitcoin. Yeah, it's fine. Delete all this stuff. Like the first rally, 1500%. The second rally, 1300% ish. The third rally, 700%, which is like half. So like let's say we do dip below that, then I would look for like a 350%, which is like half of the jump. You know what I mean? So that's how like I look at the distance in terms of like percentage change. So like if it's 1500 or 1600 or whatever, based on this whole move here, right? That's like 900 or whatever. And then we look at this one, it's like 700, then maybe you could look at like 300-400% minimum. Like I mean, this is just like how I'm looking at it. I'm not like I have no data to back this or anything, but that's just kind of how I look at it. Like I would at least look for like 350. Like just the comparison and the change in percentage based on the rally. But like here's the thing, like I want to see I want to see this get taken out, because if this gets taken out, like if we're looking at structure, it's like right, this is low solidified based on that break, but then if this low is broken, then this is now a solidified break. So you have a low, high, retracement, and then you have a move. And then I can also play like my range, like that's kind of like what I wanted. Yeah, do you have any more questions, concerns, guys? Anything? Yeah, like I'm not saying it'll happen, but I mean, I do want to see this continue lower. I don't see why this doesn't continue lower, especially with how this month might close. Like we have 20 to 25 days until this closes, so I just hope it's an engulfing. And how much was this drop here, percentage wise? Like the first drop was 83%, second drop 76%. All right, cool. Then let me anticipate like at least a 50%, you know? And then you do have like sell to buy. But yeah, if I do get that bias, like I'm not opposed to like looking at like trying to trade Bitcoin. Like that's why I've been trading gold a lot recently, because it's just been super bullish. And then like on the daily, we had the range. Like people who are in the group, I don't know if you guys remember me sending this chart. I sent this chart like 3 weeks ago, where we saw the sweep and then we broke structure. So I'm now aligned with the external. So I consider this solidification of the high. So now, like right now, if I'm looking at this, we just swept this high. So like next week is like very important because we have so much like weak order flow here. So if we take this out, maybe have a bullish range, then I would not aim for highs, like type thing. Like that's why I've been trading gold a lot, because like it looks like we were in a swing model. And like I don't know if you guys in the group saw, but Chris has been holding like buys since like here. But like honestly, the lower the better here. Like if it even touches like 4K again, that's like golden. Like I'm gonna go buy some coins. But yeah, any more questions, concerns, guys?
That's good. Appreciate it.
Cool. All right, then I guess we can end it off here. But yeah, like I said, Black Friday stuff is ending this Sunday. If you guys want to get into that, because I am going to do a lot of changes for the next year. So if you're in, you're in, and we're locked in. Because Assev is still going well too. Like, let me pull that up for you guys. We actually had a very good week this week. I'm not gonna lie, we had a very good week this week. We're still because we're still adding scripts and stuff. Yeah, you see, like this week, we did like 4% this week. Very, very nice.
Uh, I took a trade in gold this morning. I put my position as a long, and I want to see why uh, it hit stop loss like as a drop.
Okay. Oh, show me the chart.
Yes. Let me log in real quick. I'm still learning, so let me
Yeah, yeah, yeah.
see.
Yeah, this stuff, this is moving decent. I don't know. We probably might trade for like maybe like another week, and then kind of call it quits for the year, and then start again in January.
Hey, Fredo,
Uh-huh.
will you be free for a voice chat on Discord after the call?
Yeah, sure.
I bet.
Just message me on Discord. That's fine.
Sorry, it's loading right now.
You sound young, bro. How old are you?
16.
You're 16. Holy shit. I wish I would have started learning at 16, bro.
Appreciate it. Let me go to my Discord. You want me to put it in the Discord chat?
Mhm. Yeah, I mean the Zoom chat is fine.
Your
I'll give you
chat.
some free games since you're young.
Big games. I don't remember the last time I played a game.
Give you some free game. This if you wanna
Uh, Trying to find out how I can share it.
if you go to Trading View, here's like a little thing, like a little screenshot.
Uh, Training. Oh, it was an trade. I mean, trade locker.
Um, are you on a computer? What kind of computer are you on?
I'm on a phone right now because I'm in class.
Oh, then you can just screenshot. This is in class. It's hilarious.
Nah, I was watching anime in class. You're so up right now.
I put it in the
Screen,
trading
if
chat
you
right
want some,
now
screenshot this. These are the market laws. If you just understand this across the board and you apply everything that you do to this, you'll be fine. And just
because I
give it
saw
like
the
three
market
years.
structure. I saw the market structure as bullish, and I've been wondering why. I even looked at the daily time frame.
Huh?
I saw it was fully bullish until I had that drop.
Yeah, you can just screenshot and put it in the Discord. That's fine.
Yeah, I put it in the chat on the trading chat.
Um, but yeah, just screenshot that. You'll be fine. Just make sure everything you do applies to these 5 rules. These are market laws. Is it this one? Okay, you put it in the wrong chat. That's Spanish chat, but that's fine.
Sorry.
Um, so you bought here.
Yeah,
Okay. So you bought here. You always want to buy at a discount, bro. There's always going to be, let me just clear this drawings. Where the fuck is this? So if you're buying here, right? You want to always look for a high or a low to target. But if we already took out a low or a high, then we want to wait for internal moves to be taken out before we go up. Because we always have to find, we always have to take out one direction to take out the other. Like, where the fuck is this? Right? Liquidity must be sought. That's number one. Right? You need a loser for a buyer. It's a zero-sum game. A zero-sum game means that the wins and the losses accumulate to zero, which means somebody has to win or somebody has to lose in order for you to win, technically. Right? So if we're already taking out, if we're taking out money because money's above every high and low, if we're taking out money, then I need more money before I can go higher.
Oh, okay, I see.
So we can't buy here because we just took the money out. You know what I mean?
That's
So
when it
just see
dropped.
it, it's an auction. Yeah, see it as an auction. Like we just took money from here, so we now need money in the opposite direction. Right? Just like here, we took money out one direction. It's the same thing. You can't sell here because we just took money out. So I'd rather just wait for more money to be taken out to then go lower to get at least get something out of it. And then once money's taken out in one way, you got to go the other.
So do you think that in the Asian session that'll like bring it up?
Oh, well, market's about to close around 3 hours.
Okay.
Yeah, so wait for next week. But I would really just try to trade like New York session, like which is like 7 to 11 ish. That's like your best bet because you don't want to get faked out. But then there's a lot of like different stuff that you got to look into, bro. Like there's a lot of nuance to everything. I don't know if you know what nuance means, but you kind of got to figure out what works for you and then what aligns with what I'm showing that you can make your own. That's called a
Yeah,
derivative. That means that it's your understanding. You have to figure it out for you because everybody on this call who's looking at this chart automatically sees different things.
I see. Yeah, I saw you talking about that in one of your videos and your course one.
You gotta, everyone that's looking at this chart right now is looking at like automatically is gonna pick up on different things. Like some people may know that this low was swept. Some people might know that this high was swept. Some people
I
might
see.
note that we might be going up here. Some people might note that we might be going down here. Who's right? Who knows? Like we
Yeah,
can all be right because maybe this goes first and then this goes second. So we can both be right, but it's just a matter of figuring out how you can enter. So figure out your direction, then take out liquidity, take out money, a low or a high, and then you execute. You
perfect.
see like this here. You see, notice how we're always taking out a high before we go lower. We're taking out a high before we go lower.
Oh, okay. That makes
So
more sense.
if you want to sell, you need some type of highs to be taken. Same thing here. Right? You want highs to be taken to then go lower. And if you want to go higher, you need to take lows to then go higher. So
Appreciate it. That makes more
always see it like way.
clarity.
Yeah. Yeah. Like probably more examples here. It's in every market. It's all the same, bro. Right? We took out the high and then we went lower. Then we had to take out more highs to then go lower. But then before we went for this low, we needed to take out highs before we went lower.
So for that recent one, I'm predicting that.
For us, so if we break structure here, we could say we're bearish. But
Yeah,
if you want to then sell towards the target here, you need this. You need more liquid. You need more money. Liquidity is money because I need to take this out. I need to take this money out to then offload the buys to then sell. So you just need to be able to
mm,
recognize that. If you can recognize where money is being taken, right, to then align it with an external, then you can then have a high probability scenario.
appreciate it.
Mm,
I'm gonna take that like notes.
cool. But yeah, guys, any more questions? But yeah, definitely. If there's no more questions, my biggest focuses next year is gonna be, um, for one, making sure this is still consistent. Two, it's gonna be Cove, which I don't know if you guys know about Cove, but Cove, this is our crypto project that me and LexWaves are working on. This is like gonna be this is the number one, well, it's not number, but it's gonna be like, it's like on my top three priority list. It's pretty much we're building our own crypto wallet and we're building our own crypto AI, which I've shown you guys that before, I think. But and other than that, when it comes to my own trading, like the next thing I want to focus on is try to involve philosophical concepts, like kind of using the three categories in philosophy. I don't know if you guys know. I'm not too like informed on it, but like trying to use philosophy to justify my rules, like what is true, what is not, like out of all of my concepts, how do I know that they're valid? How do I know that they're not valid? And how do I know if they make sense or they don't make sense? Just to try to refine, because it's been like, I've gotten a lot of clarity when I've been trying to code like the models, where a lot of stuff is really assumed. So I definitely want to try to clear that up for next year. But other than that, guys, I'll see you guys next week.
Oh yeah. Also, uh,
Mm.
where can I find those 6 pages that you showed me earlier?
I mean, just go to the recording on YouTube, bro. It should be on the recording.
Okay, appreciate it.
Yeah.